This is a Fibonacci retracement. You've probably seen traders use this. You've probably heard of it. It's pretty confusing looking at first glance if you're just getting started, or even if you're an expert, maybe you'll find this interesting as just sort of a quick catch-up. What I want to say, just to cut right to the chase, is that the colors here on this Fibonacci retracement show you a ratio based off of the price action you're looking at. And that ratio follows something called the golden ratio, which goes back a very long time to Leonardo da Pisa, the founder of the Fibonacci ratio. And you can see here my starting point of this is going to be the top here. So this is the top here. My ending point is basically going to be this price here, basically where it bounced, Apple bounced. And then the ratio is being shown to me as such. But before I go into why I think it matters, just quick refresher. I've got these great graphics here. The Fibonacci ratio, you can see how the math works. You can run this exercise yourself if you want. 0 plus 1 is 1. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 13 is 21, and on and on and on you go. It's essentially this sequence that this guy, Leonardo da Pisa, was just sitting around one day adding the numbers up. Wow, that's so interesting. Then when you look at the ratio of these numbers, so from the current number to the previous number, you'll find that they follow a very similar ratio in the way that they are growing when you add them up together. So you've probably seen this image before. This is some Fibonacci. It's a Fibonacci layout with a Fibonacci spiral. The spiral, of course, is being drawn based off of this ratio. Each box here is just telling you 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8. And that is the basics of it. And the reason why it's so fascinating, I think why traders love it and why it's so interesting, is that you can look all around nature and see this ratio playing out. So you can actually see that these certain aspects in nature are following a Fibonacci ratio. Not only could you theoretically draw a Fibonacci spiral within these, but that if you actually were to look, for example, at the very first, a sunflower seed here and count your way out, you would see that it is expanding at a ratio that is following the golden ratio. There's just countless examples of this. I think even our hands have a certain element of the Fibonacci ratio. And so when you think about it like that, like Fibonacci ratio has been in the human lexicon for a very long time. It's in mathematical frameworks everywhere. It's also in nature everywhere. Well, why wouldn't it be in markets then, right? Are people trading according to these ratios as well, whether they know it or not? It's just sort of an act of randomness that is playing out as a Fibonacci sequence. That's why traders love this tool, and it's how you can draw these ratios on the chart based off of specific price action. Now, the reason why I really like this tool, it's the first tip in this video, is let's say we've got this chart of Apple here. We can see that Apple right here, daily chart, has been in a fairly large decline as of late. So if this is its high point, its all-time high, and we go all the way down from here, it's down 15% in a very short period of time. In about a month, Apple is down 15%. Literally, in about a month, it's down 15%. So you're like, well, if it does find a bottom here, you can see pretty large red candle, large gap down here. But also to add to that, you see the wick here, now the green candle today. So did it find a bottom right here? It's kind of interesting. And also maybe that does correspond with some other levels. And sure enough, you can sort of see some price action here that might show you there's been some buying activity right around this level. So, okay, if you were to play this as a bounce trade, what's the move? Well, traders like to use the golden ratio to understand what could possibly happen. So in this example, I've got my favorite retracement tool selected, and I go ahead and I click a starting point, which is the high again, and I take my mouse all the way to the bottom and I click, and now I have got Fibonacci ratios that are being calculated based off of this top price and where I think the bottom is. And I can see these ratios now with these colored lines. So don't get intimidated by these colored lines. These colored lines are just telling me each ratio. So I know the green line here is the 0.382 ratio price would be $235 a share. The pink line here is the 0.236 ratio. $229 a share is what that corresponds to. You can do that exercise on each of these lines. So you've got the ratio 0.618. You've probably heard that before. I think that's the most famous Fibonacci ratio, 0.618. That gives you a price of $244. So now you see where the ratio is on the chart with this retracement in mind. So now you can start to map out your levels. Okay, maybe you think Apple just bounced here. Here's my mouse. I think it just bounced. Your first area of attack would be the 0.236 ratio. If you think that it's going to follow this type of golden ratio, buyers are stepping in, well, that's where you would trade this to. That would this would be your take profit, perhaps. You could set a take profit literally at the first level in this Fibonacci retracement. Also, you can do some sort of counter analysis too, where you'll notice that this first Fibonacci retracement kind of corresponds exactly with the gap. What I mean is that Apple opened up way lower, so there's no price action here. It closed here, but then opened up down here. So that gap sometimes needs to be filled, and that takes you right near that first Fibonacci ratio. So if you're looking to trade this on a short-term time frame or just a quick swing trade, that's how you could use this tool to think through. Now, what's really great about the tool as well is that, of course, you can draw them as far as you want across your chart. I'm just going to extend them right here. But you could map out your trades from this standpoint. So perhaps you think it'll come here. Okay, that's your first level. Take your profit, or maybe you just want to see it break there first. Maybe it gets above that, retests it, gets to your second level. So you can start to map out a journey, you could say, for the stock based off of these mathematical principles. Once again, though, none of this is back tested. That's a very important thing. There's no actual raw data behind what I'm saying. This is an art with sort of a loose science on the side, being that it's founded in human history. You can see it in nature. The ratio is widely known in mathematics. But it's an art because you are adding it to your chart randomly, essentially. I click the high here, click the low, and I'm just using this now as a guide. Think of it like a treasure map. This is now my treasure map that I'm going to be following. Naturally, you could add a stop loss as well. If it, for example, goes below this initial level, which I thought was the low, I'm out. I just set a stop loss. I come back to this chart at a later date, and perhaps I redraw the retracement again. Choice is ultimately yours. You can create your own framework, but that is how you can sort of think about this. Another great feature, too, that I think is important to keep in mind is you don't have to use these levels. Oftentimes, you can just focus on the levels that you think are most interesting. So, for example, maybe we only want to focus on we just want to focus on the 0.5, 0.618, and then the 1, which would mean it retraces the entire move. Well, now it looks completely different because we've reduced the number of Fibonacci ratios we're looking at. So if you want to see as many Fibonacci ratios as possible, depending on your starting and ending point, just make sure you select all these boxes, and it will draw those ratios out pretty far on the chart. In fact, let me just really shrink it. You can see it's just massive if you keep drawing them out naturally. But the point here isn't so much to keep drawing out Fibonacci ratios until you can't see anything on your chart. It's just to illustrate how many options you have for these ratios, depending on what it is that you are trying to accomplish or what your goal is. So that's one way to use the Fibonacci retracement tool. Another great way to use the Fibonacci retracement tool, which I really think is rather interesting and oftentimes underlooked, is just to understand prior price history based off of where you've drawn the tool. Now, I can take this across any trading asset that I think is interesting. For example, if I wanted to do BTC USD, I could do just that and click. Now I've got a chart of Bitcoin here. You can see that. Well, let's say I'm interested in looking at the Fibonacci ratio of Bitcoin. Let's say, maybe you want to look back in time. Let's look back in time. And let's see, actually go back to a point where it hit an all-time high back in how about let's do this. Similar run up in 2015. So we go back to 2015 on the chart. We go ahead and click our Fibonacci ratio. We're going to draw this one. This retracement will be from the highs here all the way down to these lows here. And now what we're going to do, which is interesting, is make sure this line is fully extended right. Let's even fully extend it left. And let's zoom out and just see where those levels are in the context of today's price action. They are, so far, you can't even see them far away. So that's interesting. Well, let's just keep extending this until we see where Bitcoin trades at relative to its first sort of mega all-time high breakout that we've ever seen. So I've selected every one. Let's see if that even encapsulates it. Wow, still doesn't. So you can see that you're just in total uncharted territory. But what's interesting is you can just continue to do a process like this. Find an interesting all-time high, or let's say it's an earnings report, specific price level that you think is really interesting, and then extend those Fibonacci ratios to get a feel for where the price is now relative to that historical moment. So why don't we go back then to this breakout when Bitcoin first hit 60,000. Let's take our fib retracement. Let's click this high here. Let's go all the way down to these lows. Okay, now let's zoom out and see where this takes us in the bigger picture. So that's kind of interesting. So what you're seeing now is from the breakout in 2021, so about 2020 to 2021, which was a mega run up in Bitcoin. Let me make sure you can see that. This white line you can see here, huge run up from here to there. Then with all of the Fibonacci extensions drawn onto that, we can look at the current price action and say, well, based off of the ratios of price action, in this case, if you want to say it's random, it's totally random, human spirits, but based off of the ratios of that prior price action, and then looking at today's price action, you could sort of map out what you think might happen, or what levels are worth watching, or what looks rather challenging or as an area of support based off of all that initial run up. And you could sort of say to yourself, well, that initial all-time high from 2020 to 2021 was just a wave of new buyers. So that sort of buying activity is similar. There's a large body of new participants involved. So these ratios are still intact because those buyers and all of those traders are probably largely driving the price action today. So maybe this ratio will correspond with that. And with that, you could start to think a little critically, like, why buy right here? There's no reason to buy it right here then. Even why buy at these levels, just knowing that this was the prior high here? Maybe you'll get another retest of one of these historical Fibonacci ratio levels based off of the first epic breakout that happened in 2020, which would actually have you waiting until this 1.618 level, or 98,000, which interestingly enough corresponds perfectly back here in 2024 before the breakout to 100K started, and also even corresponds just interestingly enough with these recent dips as well. And if you wanted to trade that because you thought the next epic breakout is coming, maybe you just let this trade, and then your trade would be this target, which would be 119,000. That's just a way to look through it. Like I said, this is not an exact science. This is not rocket science. This is not back tested. This is very discretionary, very loosely based. It is one way to use the Fibonacci retracement tool, but there are countless other ways to use the tool, because you also, just going back to Apple, could very simply use it as a way to calculate retracements. So what I mean by that is, what I'm doing here is on this chart of Apple again, and let me change this color so you can really see this retracement. And this retracement now has nothing to do with the Fibonacci ratio. This retracement now is just solely, you're looking for a 50% retracement of what's gone on. So this is the chart of Apple. Like I said, you've got this big drop here, assuming this is the bottom. So this is one. Say if you bought here, you'd be whole, you're one again. Down here, if you sold, this is the bottom, it's 0. So the exact 50% marker, or that 50% retracement, would take you, oopsie, that was too large, would take you right to this green line. So now you have a rough estimate as well of like, okay, make back half of where you entered here. So you can use the Fibonacci retracement tool for quite a bit as well, not just sort of this, golden ratio, but also looking for levels or even typing in custom um, ratios that matter to you. So 0.5. Well, maybe you love 0.75, or maybe actually even better, you want to do 0.5, 0.25, 0.75. And now what you're doing is you're just mapping out these sort of, incremental 0.25 retracements from this high based off of this low. That's also kind of interesting. Kind of gives you this framework to work with. So this is the Fibonacci tool. It's ultimately up to you to go explore and see how it works. I just want to talk to you about some ways I use it or think about it. And if I was trading Apple right now, I'm not, but I would probably be using the Fibonacci ratio actually just to give me an idea of where I want to set my stop loss and set my take profit based off of this bounce. I do think this gap fill area is interesting. I do think it's really interesting how it corresponds with 0.25 now, retracement based off of this high and this low, as well as the initial Fibonacci golden ratio number that was here as well. That's kind of interesting to me. That would make this sort of an attractive zone to sort of take some profit if it did come down to this area and bounce. But that's my quick explainer on the Fibonacci retracement tool. Much more to come. I hope this helps you. And if any traders or investors out there find this interesting, just subscribe. A lot more on the way.